Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar surged against the greenback in the last 24 hours of trading as the pair built on strong intraday momentum and leapt to nearly a 1 month high of 72.12, with 13 being just posted this morning. A better than expected Aussie trade surplus data for September triggered the initial leg up from the intraday low of around 70.70. Additional to this, the Chinese Cajun manufacturing PMI data held above the expansion territory and provided an additional boost to the China proxy Australian dollar. The bullish sentiment with the weaker US dollar, as it recently peaked at 96.90 to the index, markets dropped back slightly this morning, but nevertheless still contests the highs around this initial downtrend. If you look at the weeklies, along with the 60-day moving average, that's posted at 71.86. Now I do need confirmation to support this move. It would seem that the market was heavily short, and from the rebound and with the stops triggering the rally, does question where we are going next. I think it could be a bull trap or something like a bearish ticking bomb, which could see the market drop away from these highs with the resistance seen at the moment at 72.25.45 and look back to the break level, which was at 71.40.60. We'll reassess from there. Well, it would appear that the bulls also gathered in greater numbers overnight and defended the level of 112.95. From the rebound, the market is now coasting around the downtrend line of 114.35. It is assessed from this level to start initiating short positions, as I feel the market should see the dollar recover in the next trading session today. Later, we do have the leading US data releases of the non-farm payroll with a forecast of 194,000K. with the average hourly earnings seen at 0.2% forecast and the unemployment rate forecasted at 3.7. It wasn't so long ago, it was looking back to 3.8, but that's been adjusted for October. With the recent disruption of the Hurricane Florence has led to a slight slowdown in the previous month, but nevertheless, if the numbers do come on target, I do expect to see the dollar to recover its losses and see these gains in the euro be erased and look back towards the region of 112.95. Now I am looking to trade a break beneath this level around 112.70 and therefore look to a target of 111.60. Well, the dollar yen didn't really stage any significant moves and still at this stage remains under the 113 handle. It is from a technical point, we could see a further breakdown and therefore look towards the region of 112.55 to 111.45.55, which is where the recent stab was of 37 low. I do expect to see buys from this region and could see another re-challenge to the upside. Well, the pound was all dynamic to the bullish case as the market surges on the back of the UK Brexit Secretary Dominic Raab after he indicated that a Brexit deal is due on November the 21st. He also went on to say that the agreement must be done by then to allow further legislations to be passed and further negotiations. Along with this is the fact that the Bank of England, as widely expected, kept interest rates unchanged, but did hint at a slightly faster future rate rise if Brexit goes smoothly, but warned all bets were off if next March brought a disruptive EU departure. The Bank of England Governor Mark Carney also said in the event of a no-deal Brexit, there will be a hint of supply, potentially fairly large and certainly more rapid than one accustomed to in the advanced economy. So no doubt they're still not quite confident that this deal will go through smoothly. But nevertheless, it would seem that rapid short covering was seen overnight from the break of this downtrend, and at present now sees the resistance of 130.70, support at 128.60 on the broader case. Looking at rallies, well, the gold rebounded off that level of 1,212 and now back to looking to the target of 1,246 to 50. It would seem that the initial buying interest could continue as the dollar weakens. Mind you, this was all triggered with President Trump remarks that talks with China were moving along nicely, and has helped ease recent tension between the two sides. It would seem some investors are also buying gold as a hedge against a possible Democrat victory in the US midterm election due on November the 6th. So could see the target eventually achieved at 12.50. And rounding off with oil, well, the market crushed my target at $64 a barrel, and now posts a weaker close as it hugs around the 63.5 level. With nearly a 7-month low, I'm at this stage looking at neutral. We've got the sanctions about to be imposed on the 4th of November, and we could see a bit of a whipsaw price action as the market is still a little bit uncertain to the outcome, even though India and South Korea agreed with the US on the outline of deals that would allow them to keep importing some radiant oils after this weekend. So let's see how that all turns out, and also keep an eye on tonight's non-farm payrolls number. So that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the day and a great start to the new weekend.